Now that Jackson Hole has already taken place, let's take a look at how Jerome Powell's comments can affect the price of Bitcoin and cryptocurrencies. Because it's important to note that right after Powell's statements, Bitcoin and crypto experienced a big surge in their prices. But notice how Bitcoin is giving absolutely all of it back. What does this mean? Was it all just a trap? Or can we still remain bullish on Bitcoin and crypto? This pullback that we're seeing after Powell's announcement in Jackson Hole, this retracelet of Bitcoin after its big move up, hasn't really happened across the entire crypto ecosystem in the same way. If we analyze Ethereum's chart, we'll see how this major bullish impulse so far hasn't been retraced downward the way Bitcoin has. And here, we can start to understand why some macro whales before the Jackson Hole announcement were converting Bitcoin into Ethereum. We also see how in XRP, Powell's big announcement triggered a strong surge in its price. Yes, there's been a small contraction, but nothing close to what Bitcoin has seen. The same goes for Solana. The announcement not only gave it a powerful boost in the first 4 hours, but Solana continued climbing steadily afterward. We're going to explain and understand this now. Let's start with Ethereum. Looking here at its daily chart, we can clearly see that it's sitting at the top of its macro range, having reached, and you'll see it much more clearly now, an almost record-breaking high, just barely missing a new all-time high. And this was thanks to Jerome Powell's announcement, where he made it very clear that in September there are going to be cuts in interest rates. He also spoke about certain changes in monetary policy, where the Fed will now aim not to exceed 2% annual inflation each year, abandoning the average inflation targeting system they had been working with since 2020. From 2020 to 2025, the Fed allowed inflation to go slightly above 2% in some years, as long as it balanced out with lower inflation in others. But now that's over. Each year will be evaluated independently, and inflation won't be allowed to surpass 2%. On top of that, we're seeing a special concern and a much more direct focus from the Fed on US employment. Without a doubt, this hasn't just impacted crypto, but also traditional markets. Looking now at the SP 500 chart, we can see that this news did more than just help. It boosted it significantly. Unlike Bitcoin, the SP 500, the Nasdaq, and the Dow Jones all use this news to push their indexes higher. And not only that, they've managed to hold those high levels, unlike Bitcoin. And in the case of the Dow Jones, how key it has been to finally break through and reach a brand new all-time high. Having said that, let's go back to Ethereum. I'll also tell you that we remain optimistic about equities. You probably know that already. And keeping that context in mind, on one hand, we cannot forget about the major bullish trend Ethereum is in. Without a doubt, this makes us stay bullish on its price, even though we may be sitting right at the top of a macro range. But remember, markets exist to break highs and continue trending, and that's something we need to pay very close attention to, and of course, keep in mind moving forward. Now, yes, we've just made a new all-time high, but it was a bit ridiculous. A distribution was created there, and immediately they started attacking it downward. So the question is, does this worry us? Honestly, not in the slightest. You'll see how even a drop in Ethereum's price wouldn't be a bad thing at all. It would be something expected, even natural. Still, I'll show you how we're going to monitor whether we should expect a continuation of the decline before moving higher, or instead if we're going to push upward immediately. You'll see this very clearly in just a few minutes, but it's important to understand what these assets are actually doing. Take a look at XRP on the 4-hour time frame. We've just had a pretty strong and aggressive black swan event. Notice how we've broken down, and now the price is working a macro defense zone, a zone that XRP is respecting very well. At top of this defense zone, we also place a lot of emphasis on the structure we've identified, because we think sooner or later it's going to break. So the question here, looking at this order flow chart, is whether the price will be able to hold this structure I'm showing you. Right now, it looks like a floating structure, but when we zoom in on order flow and see what actually happened inside those candles, we realize there's a cluster here that really caught our attention. Let's just say this was a spectacular buy and sell battle. You only have to look at the volume and the delta, which is completely undecided. That means there were practically equal amounts of market buys and sells throughout the entire candle. What stands out even more? Well, this cluster that tried to sell off, but in the end, the price managed to push upward again and again until closing with a really strong bullish candle. So we can say that this transactional level in XRP was the reason, the motive, the driver in terms of liquidity that pushed XRP higher. And that's why the price level of 2.93 is considered a key level for us here at Crypto Insight. If we move to the right, we can see how, coincidentally, the price is currently interacting at this very level. We're watching strong selling pressure coming in, and the question we're asking ourselves is whether the selling effort is truly going to deliver a bearish outcome. And in practice, how can we take advantage of this or understand it? Well, let me explain that now, but first...
Welcome to Crypto Insight, your ethical and moral channel channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Looking at this on the traditional chart, if at the current point we're finding a lot of transactional interest right here, we have to think about how many open positions exist at this price level. What this leads us to consider is the following. If XRP, and as we'll see later, other cryptocurrencies too, wanted to move higher immediately, then prices would not fall below this structure. Why? Because at these price levels, we're finding a large number of traders, both long and short. If institutions are behind this move, they have a strong interest in defending their long positions. That's why, in that scenario, if XRP were really going to experience a strong bullish continuation, institutions would not allow XRP to drop below this current level. On the other hand, if we see that XRP doesn't hold this structure, it's a signal that institutions aren't defending it. So here's what I think would happen in that case. If institutions don't defend this structure, the most plausible and most expected outcome would be some kind of structural trap, a macro setup. If we lose this structure, I have no doubt will generate at least a climactic action in the form of a trap, something that could actually help us resume the bullish projection afterward. Now let's take a look at Ethereum in relation to its master candle, the one driven by Jerome Powell's statements at Jackson Hole. You'll notice something important here. In this case, we're not analyzing clusters themselves, but with the big trades tool, we're examining which price level during Ethereum's big master candle was key to pushing its price further upward. And what we found is that this level, without any doubt, is around $4,550. At that level, we identified some very large trades, potentially from the same group of operators. These were big operations, and that could imply institutional positioning at a price point where Ethereum was able to continue climbing. That's why it's key to understand how, by analyzing clusters in XRP and then looking at big trades in Ethereum, both are pointing to the exact same landing zone at the current price. So here, I'll tell you exactly the same thing I mentioned with XRP, but this time for Ethereum. And we'll look at it on the traditional chart. On Ethereum, even if it's not clearly visible in this chart, we can see that there's a key level right here. Just like with XRP, if Ethereum can defend the price level of $4,530, then we can expect immediate bullish continuations in its price. But if we see that institutions have no intention of defending this structure, keeping in mind that this was the precursor candle from Jackson Hole that sparked the rally, then it makes sense to think we'll blow right through that big precursor candle and go after much lower structures. That's why it's vital to see if this price structure is going to hold or not. Otherwise, without a doubt, the price would fall back to its defense zone or even create a trap before resuming the bullish trend in crypto, in this case, in Ethereum. Now take a look at what Chainlink is telling us. With Chainlink, we're not going to use order flow or big trades here, but notice how it's working a macro wedge pattern, which in practice is forming a Z wave. Here's the bearish impulse, here's the W, this is a weak Y, and altogether it forms a very clear and obvious Z. If we zoom in, we can see how institutions are actually working that wedge. Look closely at Chainlink's wedge and notice where it's hitting right now. It's pressing against a defense zone that supports the idea that if it doesn't break downward, we could continue with a very bullish Z wave. So look at how Link is completely supporting the same hypothesis we're seeing in Ethereum and XRP. We're at a point where either the zone holds and we see an explosive upward move, or we face a large downside margin. For Chainlink, I speculate this drop could be into the $21 to $29 range before continuing higher. As you can see, it's key to understand the importance of structure, both for those already long in cryptocurrencies who know how to manage their positions, and for those waiting for a good trading opportunity. For the first group, they already know what to do. For the second, they need to see whether current levels hold and prices push higher before buying, or wait until the structure is broken and then look for opportunities at lower key levels. That's why it's so crucial to understand the importance of the structures we're discussing now. And now let's talk about Bitcoin, because this is key. But before that, if you'd like to be part of the Crypto Insight Premium community,
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrency cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00 and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
Now, keeping in mind everything we've been analyzing with the charts of Ethereum, XRP, and Link, we start to realize that the entire crypto market is telling us the same thing. On one hand, what could Bitcoin be signaling? It could be saying, look, I'm just here to make a structural trap and then immediately bounce higher. Could that happen? Yes, it could. But something tells me we're going to take the second route, the route of looking down first, because as you can see in Ethereum and XRP and Link, all three are sitting right at critical levels. And we said that if prices don't hold those levels and instead fall, then what awaits the crypto ecosystem are bigger drops into macro structures before we can finally look upward again. So what would that imply for Bitcoin? For Bitcoin, it would mean that the price wants to reach the macro structure of this ascending channel. And in my view, not only would it reach it, but it could also create a trap there. For me, that would be a perfect market extreme, one that allows crypto to continue on its bullish path. As you can see, everything depends on the coming hours, whether or not the current levels I've mentioned in those three assets are respected. Remember, we're bullish in the medium to long term, both on equities and on cryptocurrencies, while knowing that in the short term, there still is the possibility that crypto could fall further yet. And that makes sense. But we remain positive. If you found this advanced technical analysis interesting, let me know in the comments. Also, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Good luck with your trading, and until next time.